Hey everyone, it's Ryan with Stock Investing and Trading 101. Today I'm doing my end of the week portfolio review where I talk about my past week, my trades, my strategy, and my strategy moving into next week. So this past week my portfolio was up just about 7.5%. I just had a whole bunch of option contracts expire that I sold, and my covered call and selling option strategy, hashtag Theta Gang, has been going pretty well. So let's talk about that. So I've been selling quite a bit of covered calls on quite a few different stocks. And today I've been selling usually weeklies or sometimes monthlies that expire relatively worthless pretty often. And so I've been selling calls against Ford, Cedar Fair, AT&T, MJ, Altria, Neo, Kinder Morgan, GE, which I've been selling a couple contracts every single week, SH, which is one of my hedges, which I'm going to be talking more about why I'm hedging, 100 shares of NRZ, the REIT, Coca-Cola, and SQQQ, which is another hedge of mine. So you see, I'm selling quite a bit of contracts every single week against all of these stocks. I'm selling contracts for, depending on the stock, pretty much $5 to $20 per contract, sometimes more. And when they expire, I get to keep the full premium. So I just had a bunch of contracts expire today, although I did have my shares of Ford get assigned at $5.50, so I'm probably going to sell a $5.50 put if we have a red day, take in some credit, and be able to buy those shares back for ultimately less than that. And then I have some fractional shares, which isn't too big of a deal. I have Realty Income, Procter Gamble, Verizon. Those are a few of my fractional shares, just companies that I enjoy and I think are at decent prices and kind of short-term swing trades. And then I have a few contracts that are still open. So I have my SH call, two MJ calls, I have a fun call, and some MJ. And then I also have a put sold against Store Capital, and I have a long put on Cedar Fair. So this is my hedge on my Cedar Fair investment, since I'm holding 100 shares, and Cedar Fair has been extremely bullish, up 20% in the past 1 month. So I'm buying puts to hedge this position because I could see it going back into the $20 range pretty easily here. And also I have 200 shares of SQQQ, which I just had contracts that expired today. So you see both contracts that I sold expired worthless. Now I don't have any calls limiting my upside. So if we have a red weekend or Monday or Tuesday actually, because the market's closed on Monday, then I'll be able to hedge my positions if we have a gap down or a red day on Tuesday. So this is my Robinhood portfolio, up 7.5% in the last week, and up about 12% in the last month, which honestly, the market has been on a big bull run, so it's not extremely difficult to, make money in, I guess what you could call a new bull market possibly. But then I have one more portfolio. This is my public portfolio. I have a referral link in the description. If you're interested, you can buy fractional shares every day during market hours at any point in the day, which is something I really like. But this portfolio is up 6%. I just made this portfolio in February, so about 2-3 months ago, I made this portfolio right before the huge correction. And as you see, I've been able to bounce from this big bad dip right here back into the green. And I'm holding about half the portfolio in cash. So since I've gotten myself into the green, I'm going to sell a lot of my holdings, have some cash ready, which I also have on Robinhood. I have a big cash position. And the reason that I'm hedging so much is because I see this China tension in the market. I see the fact that we've rallied so much in the past month or two, or really the past month. The market is up big time from the lows. we've gone nothing but up for the last month, and so that's what is making me want to hedge, on top of the fact that a lot of these hedge, like the VIX and things like that, are down right now, so you can buy them at a good price. But there's always risk to that. But my current stock holdings, we have Procter & Gamble, SPYD, Verizon, Realty Income, Merck. I got a little UVXY. This is a hedge. So I always like to hold a little bit of hedge in my portfolio. That way, if the market goes down, you're not completely screwed. If it goes up, you're not screwed. And if it goes sideways, all of the above, you have all of your bases covered, at least somewhat. And, the more bearish that you are, the more heavily you could hedge. But I'm hedged somewhat heavily, but I'm definitely ready to buy into volatility if I see a red day coming. But that's a whole nother matter, and that's I'm not going to try to predict the market. My point is I always like to stay hedged and be ready for anything in this market. So that's the video, guys. That's my two portfolios. The covered call strategy has really been working. I've been selling cash secured puts as well on some companies. So I sell the put, pretty much agreeing to buy the shares. And either it's going to expire worthless, or I get to buy a quality stock at a good price that I chose. So that's what I got for you guys today. I had my silver call get assigned. If you haven't already subscribed to the channel, please subscribe, thumbs up the video, check out my other videos. If you have any questions, comment below, and we'll talk to you guys soon.